Hello everybody. So a lot of updates for many different stocks today. But of course, the bigger headline is the bad macro and the casino vibes of the market, which continue. They have not changed. We are still in what I call a crazy market, and I've been very on the sidelines, very much on the sidelines, because this has been the new normal, moves that don't make much sense. High volatility, super high volatility, much higher volatility than in prior years, I would argue, and the data is on my side, by the way, on this. And is it a new normal? What's going on? So let's go. Let's look at this. So first of all, we begin with a bad macro. And boy, was it bad today. The headlines, 30-year Treasury tops at 5.33%. The 10-year is also peaking. I mean, it's pretty much as high as it's been. People are fearful that this will hit 5%. And so, of course, the market sold off on the news of the yields being back up. And, you try to make sense of this fact that the yields are going back up. This is not getting any better. And so you'd think, what would be impacted, for example? What would be the first thing to be impacted? What comes to mind, for example? How about real estate? How about real estate stocks, right? That would make sense, right? I mean, the 10-year being so high, 30-year being so high, mortgages follow the 10-year a lot, but, mortgages are headed to 8% if this continues. So really, what should be weak is real estate. Well, was real estate weak today? No, it wasn't. If you look at some of the stocks that I follow on the channel, I follow two in real estate. I follow React and Zillow. They were both up. Especially Reacts. And this is what I mean. And of course, these companies have great fundamentals, but you'll see, I'll show you companies with great fundamentals just as well who are crashing in light of the news. And so this is what I call this video casino vibes. It's like, okay, you want to try to make sense of earnings. You want to try to make sense of macro. That doesn't mean that the stock is going to go the way of logic. And it used to be that there was correlation between news and between price action, and there really isn't anymore. So the randomness, in my view, has increased. This is not the first time this happens this year. Do you remember HIMS earlier this year? We had no more lawsuits. We had both GLPs. We had everything going on for the stock, and the stock was trading at 15. It was trading at like 1/3 the value of what it was trading at when it had all of these risks. The market takes a long while to be a weighing machine, and it's taken quite a long time, way too long. And why is that? It's because, again, the issue of 2026, let's hope this remains an issue of 2026 and this does not become an issue until the 2030s. The Middle East. Everything's tanking again because of the Middle East. We're down 1.3% on the NASDAQ. Of course, that's the benchmark I use because I cover growth stocks, right? We have oil spiking at a 3-week high. So I guess the breather we got in August is going to be gone if this continues. And we have somebody saying, oh, we're teasing action in Hormuz trade. Teasing action. What does that even mean? To tease? What is that? Is that a missile? Is that a tease? Like, what does that even mean? So, if there's a takeaway to this rant right here, is the takeaway is, and I'm just talking about me here, no financial advice, but me. I wait for deals. I wait for the deals because your stocks that have been spiking for the first 2 weeks of August, like if this continues, next thing you know, maybe 7 days from now, this escalates again. We're in full-blown, missile exchanges again, and boom, the market drops 8% or 12% or something like that. We have no idea. We have grace one after grace one. So, of course, this is not a grace one yet. This is just a tiny thing. But, because I guess we use the word teasing, but teasing can really move into something else. Are we done already? Are we going to be done with this already? This is just so annoying. We have so much going on in this market, and this is putting a lid on the markets going higher. This is hindering rate cuts, very much hindering rate cuts with oil going up. If oil keeps going up, or if there's rumors that oil will go up, are we going to get rate cuts? We're probably not going to get rate cuts. If you look at the CME Fed Watch tool, it says we get a hike in December. And of course, this happens right before Jackson Hole, right before a very important speech. We have teasing action in Hormuz and we have oil up. So the point of this rant is that let's wait for deals because I'm not so sure this madness will end anytime soon anymore. And the market, for some reason, the market seems to still react to this very much. And you may say, oh, it's oil. Oil is important. Yeah, oil is important. But it reacts to these headlines, not necessarily on stocks who would be negatively impacted by oil, like, I don't know, consumer discretionary stocks. No, it acts on high beta stock. It acts on innovation stocks, which are not linked to oil. Innovation stocks are not linked to oil. I mean, even if you get a recession or an economic downturn, it's gonna be a minimal impact to a stock growing top line at 50%, 100%, even 30%. But anyways, this is the world we're in. So, case in point about the volatility. I just put a few examples of a few stocks. I could have put NVIDIA. AMD was down quite a bit too. AMD is a little expensive, but I could have put NVIDIA. I could have put Meta. Meta's down for another reason. But I put just stocks that are firing on all cylinders. Like to me, the prime example of two stocks that are firing on all cylinders is HIMS and HERS, right, down 4%. Why? Because it's a high beta stock. It's a high beta stock. That's the only explanation I have, right? Sofi down 3.5%. You have Zeta, C Limited, HIMS, Sofi. I would argue these four stocks posted stellar Q1s. Absolutely, Q2s, sorry, not Q1s. Absolutely amazing. I'm thinking particularly about HIMS, particularly about C Limited, and yet they're down about, par for the course here. Because it's a high beta stocks and because of this. That's the macro for you. And for HIMS, it's especially frustrating because you have pretty much Dudum, and I need to watch this CNBC interview, but fascinating the handle that he's got on the peptide space. You can see he spends a lot of time working on peptides, but he's essentially saying that after 2030, and he uses the number 2030, guess what? Because that's when the rent seeking ends on the biggest GLP-1 of them all. The biggest GLP-1 of them all falls off patent, I think, in 29 or 2030, something like that. So it turns out, when it falls off patent, you can drop the price of peptides to like $40 a month. And that's probably him thinking about an 80% gross margin on this. Right? The only thing that makes peptides expensive is the rent seeking of companies who were able to patent a naturally occurring compound by slightly modifying it so it lasts longer in the stomach. I'm simplifying, but not really. A GLP-1 is a natural compound. They just modified it slightly to be able to patent it. And of course, a lot of the other peptides that are coming, BPC 157, etc., they're also just chains of amino acids. They're chains of amino acid. They don't cost that much to manufacture. So to me, this is a very bullish interview. He also talked about wearables, talked about machine learning, a bunch of stuff in there. I need to watch the full interview, but this interview drops, and then you have HIMS down 4%. That proves nothing, but to me, HIMS is not trading on fundamentals. It's trading on macro. It's put in a basket of high beta stocks, and it's just being sold off. And this is yet another day where fundamentals are ignored. Let's continue. Let's talk now about NBIS and IREN. So the rotation is happening. This is the second day. This is the second day where you have NBIS down way more than IREN. Actually, yesterday you had NBIS down while IREN was slightly up. Today you have NBIS down more than IREN. So that's the second day where we see the valuation gap closing. But then again, when I look at this price action, I ask myself a few things. Did these stocks drop simply because high beta and high beta is bad? If you look at all of the sector, so you had, of course, NBIS and IREN, and NBIS at one point was down, just about 10% for like a few hours today. But if you look at other stocks in the sector, Mara down 7%, Cypher down 13%, Riot down 5%. I don't have them all, but they're all way, way down. And at first I was like, okay, well, this is the market being smart. The market is like, I don't like collocated AI. I don't like that as much as I like GPU-owned AI. And the main difference, of course, between an NBIS and an IREN is an NBIS and an IREN own the GPUs. A Riot, a Cypher, a Mara, when they get their deals signed, eventually they'll find a few. They're going to be landlords. They own the shell, but they don't own the GPUs. And you could be tempted to say, oh, the market likes it better when companies like GPUs. But when you look at price action like this and you average it out, it's all down the same. It's all down the same, and it's further more frustrating that if you look at companies like Mara, for example, but CleanSpark too, I could put in there. These companies still have big Bitcoin mining operations, and you would think the market pays attention to that because Bitcoin was up today. No, and Bitcoin was up relatively to the market. Bitcoin was up a lot. Bitcoin was up in the absolute, but it was also up a lot relatively to the markets, which were dumping. Well, it didn't make a difference. The market dumped it all anyways. It's as if being listed on a stock exchange is all you need for the market to dump you on a day like this. Hence why the market has casino vibes right now, and it continues to do that. And is that the new normal? Oh, well, I hope not, because if I really hope not. I don't know what I'm gonna do. No, it's not the new normal. It can't be the new normal. I think we'll come back to normal after a few things change. But anyways, moving on to MSTR, IBIT, and digital credit in general. So of course, Stretch, SATA, very, very, very stable on the day. I've said this before, but it looks like SATA will reach par sooner than Stretch, and so that's it. There's not much to say about that. They both need Bitcoin to come back up, though, especially Stretch. SATA also needs it a little bit. So the digital credit is just there, just waiting for Bitcoin to recover. But look at this delta, and this is why I tell you this behaves a little more like a casino. So you have Bitcoin up on the day, and again being up 0.5% is extraordinary because everything was down, every risk asset was down today, and then you have strategy down 5%. Now, my viewers who follow strategy will probably know what's going on. Somebody was ATMing the common pretty hard, I think. We'll know that next week, but I think somebody was ATMing the common. But again, is all of that fall due to the ATM of the common? If I look at the ASST, for example, they're only down 3%. So I have to assume a chunk of that is also due to the fact that the market has become a casino, and today decided to dump it all because of headlines not related to Bitcoin. Because of a long-winded train of thought. All of this is. It's like the conflict in the Middle East is going to start again, and as a result of that, oil is going to stay high again forever. And as a result of that, it's going to seep through inflation. And as a result of that, and we assume the job market is going to be fine. As a result of that, we're going to feel the need to raise rates. That's like a chain of events of like 4 different things. And the market moves on a news item teasing the Strait of Hormuz. That news item is assumed to have epic consequences, but we need many things to happen. We need the teasing to happen, then we need oil to go up, then we need oil going up to show through inflation, and then we need the job market to be strong, and that inflation go up so that the mandate applies and they can raise rates, right? Even if there's inflation, if the job market's not doing well, they're not going to raise rate if the job market is doing very poorly, and if the job market is showing signs of weakness. So the market assumes a chain of events of like 4 events. It's getting ridiculous. All of the things that have to happen a certain way to justify some of the stocks today being down. And anyways, I'll conclude with the casino vibes once again, talking about Meta. So Meta down a whopping 4.5% today. Meta was down 4.5% today. Of course, this was predictable. The headlines, so everybody was kind of expecting the headlines to shake things up. Maybe not that much. So we ask ourselves how much of that drop is due to Meta. Perhaps half of it. Perhaps half of the drop is due to Meta. But now we have Meta, down 10% over the past 5 days. So sometimes even mega cap stocks show the volatility of large cryptos. this is quite insane to me. One question that I have to say is Meta going to be trading at a valuation like Sofi at some point? Like we're getting close at 0.32. We are getting way too cheap for a big tech name. For a big tech name with a lot of avenues for growth, and this is all because of a 1.4 trillion headline numbers that people put forward, and they're not looking at precedent worst case scenarios like what happened to Microsoft, like what happened to the cigarette makers in the 90s. They're not looking at like the worst case scenario doesn't equal to $1 trillion fine. Like that's literally the SEC filing to cover themselves, and they have to write all of the risks to scare you away from buying the stock. But big fines get renegotiated. This is exactly what I said yesterday. The headlines today on Meta were enough, and they were mostly recycled headlines from yesterday, by the way, but they were enough to make the stock drop. And so to me, I view this as an opportunity. Will it go down more? Well, I have no idea. It all depends on the teasing, if it goes down more or not. It all depends on the teasing. So hopefully we don't get any teasing. Anyways, this has been a frustrating day in the market. I'm okay with that. I'll take it. We've had quite a few good days in August so far, so I'm okay with it. But let's not have 3 days or 4 days like this in a row, because we've gone through so many periods where we've had 3 or 4 days like this in a row. So as always, let's be careful with leverage and all that sort of stuff, because we've been through periods where we've had days like this, multiple days in a row. So let's just be careful and realize, when will the market go back up? I don't know anymore. I invest for 2030 and beyond. 2030 and beyond is my timeline at this point. Anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.